Hello, Danas, you here. I'm making a market update for the week which ended on Friday, January 29th, 2016. Okay, so as you can notice, market this week was up on the upside, gain about 36 points on S&P 500. 46, actually 47 points gain only on Friday. So when Thursday the week was negative, but was rescued by the last moves up, the last move on the upside. Of course, you heard about the decision of Bank of Japan to go to negative rates, for the first time ever, and what people expectations are now that the Feds will do the same. So we'll get rid of the small increase they did in December, which is anyway was very, very low, and then go to zero, maybe to negative. And this will buy some time. I'm not sure if you'll help the bull market from collapse, but that's the expectation right now. So you need to remember that stock market, it's about 6 months ahead of the economy. So what we're seeing today is the expectation what people have in around 6 months from now. Okay, so I've seen people saying we're not in a bear market because the things are still good. It doesn't matter what is today, it's what people anticipate in the future. So when the market dropped here in August, that was the previous stop. Okay, and people who base their conclusion on fundamentals, no, not on technical analysis. Okay, so those insiders who know about the economy, the Feds, and everybody else. So the expectation was that the economy is slowing down. So and actually they were right. If you heard the news, the fourth quarter GDP was not negative, which is good, but definitely it's the show is weaker than the previous 3 quarters. Okay, so this plunge right now, which partly people believe is because of the oil. Probably that's one of the problems. It's not the oil per se, is the fact that the fact that it's so low, that means the demand is low. Okay, that's one of the points. And if the demand is low, that means the economy, the economy, it's cooling down. I actually talked to a broker a few days ago. A guy with a lot of experience in stock market and everything for years and years, and he said actually, despite all what we hear, people are concerned about what China economy is doing. So what people find out recently is that the Chinese were cooking the books. So this is the reaction of the Chinese economy. That's what we see. And because of the economy is global, we can see the market, the American market, and the global market actually slowing down as well. Okay, so China is the second economy in the world, so anything that happened there will definitely be felt in everywhere else. So okay, let's look at this at the chart right now. The good news is that the market the bull market uptrend line, which is here, let me see. Okay, which is around 1880 right now. Okay, somewhere in here. Okay, acted as support. So we obviously, you remember, we had a breach to 1812, I guess, or 1818. It's temporary. So that's why I'm not using candlesticks, because for me are a little bit misleading. So I prefer the closing data, and the market actually closed around 1880 2 weeks ago. Okay, so that's what counts for me. Why I say it was bearish. This move down was bearish than the previous one in August, September 2015, is that market closed below the SMA 120, which is around 1875 right now. So for me, for this bearish momentum to continue, I want to see that market won't be able to go here. Let's say 1990 above this. That will be something. Okay, if it goes there, then again, most likely at this point I will be neutral here, because it will be what will suggest is that is gonna go sideways. So we have a very small downtrend line, not serious, just a few months or half a year, let's hear. So at this point, what I can say from this is that the high in November was lower than the one in August, which is a little bit bearish, of course, but I'm not gonna make a big deal about it. So what bulls need to do actually, it's making another higher high. So anything about 2120, 2150, what was I'm not sure what was okay, something around this value, but something serious, something obvious, like 2300, something like that. If market managed to go there, then probably we're gonna have another leg up. Okay, but at this point it's very, very close technically. From what I'm using, it's very close to the bearish signal. As you can see, the EMA 30 and EMA 60 on weekly chart, they're touching right now. Never did this before. Okay, not even here in August. We had another big scare in here in the end of 2011, but pretty much that's, it held. It didn't happen. So and also this SMA 120 was not crossed except here briefly, but it doesn't matter because it's just at the beginning, so I remain bearish to neutral right now. I want to see the market making another low, closing anywhere like 1840, 1850. That will be something. Any close below the stock, the bull market uptrend line will be very significant, and obviously the EMAs probably will cross at that time, but not right now. So we can expect now a little bit of action on the upside. The market actually, the move was very, very bullish on Friday. That was an explosive day, and these days when they keep going up without any correction, that says a lot. I mean, people are rushing to buy more, and obviously the shorts are rushing to short the market. But we'll see how it will react. It's how to say, all this when they start decreasing the interest rates, actually for me it's a negative sign. So that means that economy is in trouble and they try to save it. So looking back, as I probably mentioned this before, I was very surprised for the raise of rate in December, and I think this is a bluff. And actually, it was a bluff. They're bluffing that the economy is going so well that they can afford to increase the rates. Was not the case. So now the expectation is to get rid of that, going to zero, then eventually a negative, like the Bank of Japan. And I think this is just buying time, to be honest. It has to be more than that. The economy needs to function much better than all this help which it gets from decreasing the rate. So if you remember, those of you who remember the 2007-2009 bear market, actually they were decreasing the interest rate all the time. Okay, so the day when they announced the rate cut, the market was jumping up, just to see in a week or two market actually going below even the previous lows. And the same happened on the upside when they increase the rates. It's the first reaction is the market to move down, but then the news is absorbed into the price and it's going up. So let's come back now to the technical. So that's the conclusion now. If this 1975, 1980, if I see a move down from here, this is really significant, even more bearish than before, because that means something. If it goes above this value, that will be the first step, and then the big one bullish sign will be high around 2300. Okay. So this is for S&P. Let's look a bit the other indicators. So Dow. Dow is the most bearish of all. As I mentioned before, actually it has a crossover in here. It's also below the uptrend line. Everything, it's technically from my point of view, this is in a bear market. But as I can say, I like to draw my conclusion. S&P 500 is more diverse than Dow Jones, and Nasdaq. It's also too much technology in there, So, and I want to see, to be honest, I want to see all a confirmation from all those three major indexes, at least Nasdaq, Dow, and S&P 500. All of them, I can see this crossover, bearish crossover, then move below the small 120 and below the uptrend line and stay here for a while. I mean, we never go down in a straight line, okay? But I want to see just attempts to go above the uptrend line, but unsuccessful. So if we see this definitely will be extremely bearish. Nasdaq is the most bullish, definitely the most bullish index right now. It's crazier than others, in a sense that the moves up and down are usually more violent. But look, it barely crossed the small 120, and actually now it's a little bit above. With the move on Friday, it's a little bit above. So no bearish crossover yet, and the uptrend line, it's pretty far away right now, 400 points. So for 4200, it's the uptrend line. So this one is the most bullish. That's why I told you before, I'm bearish, but a little bit skeptical until I see the very clear confirmation. So for me, I don't care if people making money here on the upside, on the downside, or this very fast move. For me, safety is more important. So I want when I want to go into inverse ETFs, I want to see a clear move down, and I don't see it right now. Okay. Okay, I have a little bit of time. Usually I make like 10 minutes. Let's look at oil. Okay, oil or WUSO, which one of these? It doesn't matter which one. Okay. So whatever we saw on the upside was pretty much not significant, to be honest. It's, look at this. This is the weekly chart. You can't even notice. Okay, so I will speculate a lot to saying that this is the bottom, So as I mentioned before, I never call the bottom or the top when it's a little bit after. So if you go say to 14 whatever, and I'll see these patterns of higher highs and higher lows, then I'll say yes, that was the bottom. And it's okay for me. From 14, I can still make plenty of money, But if you do like this, look, here is a huge, actually, step. Okay, 16 to 20. Oh my God, this is a huge increase. If you've been fooled by this, you could be in a big trouble at 20, and now it's 9.6. And again here, so this zigzags, this move on the upside, you shouldn't trust them unless you look for a chart and you see that there's something like this. Okay, look, it isn't indeed. You can buy all these dips because the chart looks that is going up. Okay, and that's the point. That one you're supposed to be contrarian. Right now, being a contrarian means the trend is definitely down. You short all of this increase. You see a little bit bump on upside, you short it. Cover whenever you want. It doesn't matter. You see a little bit of another move on outside, again, you short it again. So that's actually, I'll talk about this. This is a really misconception about buying long and selling high. I mean, people think that this is um, you can do this both in an uptrend or a downtrend, and it's actually not true. Only in an uptrend this is true. Okay, so see you guys. I'm starting a series for the beginners. So if you know anybody who just starting trading, you can direct them to my website. Actually, that was the first video which I made, and I put on hold and start making this weekly updates. Now I'm going back, and I'm gonna publish a few of them soon. Okay,